Stock market chaos. Tariffs, inflation, and economic doom. Boom! Should investors brace for a storm or stay calm? The stock market is sending mixed signals right now. Futures are rising, but the economy's fragile. Is this a false calm or a real recovery? Let's break this down. Monkeying around with market cycles, Monday started strong. S&P 500 futures jumped 0.41%. Nasdaq 100 futures surged 0.44%, while Dow Jones Industrial Average futures added 153 points, about 0.35%. But don't pop the champagne yet. Last week saw historic losses across all three major U.S. indexes. The S&P 500 plummeted 2.4%, its worst weekly drop since late May, while the Dow Jones Industrial Average crashed 2.9%, its sharpest fall since April. The Nasdaq Composite wasn't spared either, sliding 2.2%. Why the sudden dip last week? Two major culprits: a disappointing July jobs report that hinted at a cooling labor market, and President Trump's new reciprocal tariffs on dozens of countries, from Syria to Taiwan, with duties ranging from 10% to 41%. The tariffs could mean higher costs for U.S. consumers and potential backlash from trading partners. But here's the twist. Despite these concerns, futures rebounded. Why? Investors might be pricing in a delayed Fed rate cut. Until last week, markets expected a September cut, but now experts say the weak jobs data makes that less likely. Meanwhile, August looms as a historically tough month for stocks. Research shows the Dow's worst month, and S&P 500 and Nasdaq's second worst since 1988. Is this a seasonal slump, or is something more ominous brewing? The oil-gold drama. Oil prices dipped slightly Monday after OPEC Plus announced a 547,000 barrels per day production hike for September. Analysts cite concerns about Russian supply disruptions and a tightening market structure, despite prices hovering near $70. Brent crude fell to $69.24 barrel, negative 62%, while U.S. WTI declined to $66.94, negative 58% after Friday's $2 drop. Gold, meanwhile, fell 0.22% to $3,355.37 per ounce after a roller coaster week. It had hit a one-week high Friday as weak jobs data sparked rate cut hopes, but receded as the dollar strengthened. The precious metal remains sensitive to Fed policy anticipations. The controversy: tariffs, savior or saboteur? Tariff supporters argue they level the playing field and protect U.S. industries. Critics warn they're inflation fireworks waiting to erupt. Do tariffs pay off long-term or just shift economic pain? The market seems divided. Your turn. What would you do? 1. Should Trump's tariffs be enacted? 2. Could August's market ghosts haunt us this year? 3. Will gold shine brighter if the Fed cuts rates? Share your take below. We'd love to hear if you're bullish, bearish, or thoroughly confused. Stocks tumble amid economic uncertainty and tariff fears. Stock markets around the world took a significant tumble as economic fears escalated. The S&P 500, Dow Jones, and Nasdaq 100 all saw sharp declines, with the latter two hitting 2- and 5-week lows respectively. The culprit? Tariff concerns and disappointing U.S. economic reports. Investors are worried that increased tariffs will dampen economic growth, and recent data on payrolls and manufacturing activity have only heightened those fears. But here's where it gets controversial. Some analysts argue that the market's reaction may be overblown and that tariffs could ultimately stimulate certain sectors. What do you think? Is this a necessary move for the U.S. economy or a dangerous path? Late Thursday, President Trump announced a new wave of tariffs, including a global minimum of 10% and higher tariffs for countries with trade surpluses with the U.S. This news, combined with weaker-than-expected job growth and manufacturing activity, sent stocks plummeting. Amazon also took a hit, dropping over 8% after projecting weaker-than-expected Q3 operating income. But there's a silver lining. Bond yields have fallen, with the 10-year T-note yield dropping to a one-month low. This could be good news for investors looking to buy bonds, but it also raises questions about the health of the U.S. economy. The Federal Reserve is watching these developments closely, and the chances of a rate cut in September have increased significantly, As the earnings season continues, it's clear that some stocks are weathering the storm better than others. Home-building stocks, for example, have rallied as bond yields fall, suggesting that lower rates could boost housing demand. Meanwhile, chip stocks are under pressure, with companies like Marvell Technology and Micron Technology seeing significant declines. What do you think about the current state of the stock market? Are you about the impact of tariffs and economic reports, or do you see opportunities for growth? Share your thoughts in the comments below. We want to hear from you. Wall Street panic: how Trump's tariffs and the Fed's stance are shaking investor confidence. The uneasy truce between Wall Street and Washington is crumbling. Here's why you should be worried. For months, investors shrugged off Trump's trade war and the Fed's hawkish stance, believing a strong economy would keep markets afloat. But that confidence is fading fast. Weak job growth and Trump's latest tariffs have investors on edge, putting pressure on the Fed to cut rates. Many are now questioning whether the White House's protectionist policies are doing more harm than good. This is the part most people miss. The real risk isn't just a market downturn, but a fundamental shift in how Wall Street views Washington. And that could have far-reaching consequences for all of us. What do you think? Is it time for a new approach, or should investors hold steady? Let us know in the comments.